The current live trading price for BigBear.Ai, BBai, is $8.12, representing a remarkable intraday increase of nearly 15%. This kind of massive move is what gets retail investors buzzing, and for good reason. It's a stark reminder of the sheer volatility and speculative energy that still exists in certain corners of the market, particularly among companies with a heavy focus on artificial intelligence. While the conventional narrative around a jump like this might be tied to a major contract win or a positive analyst rating, the real story here is far more intricate, and it's a perfect example of how the market's underlying mechanics can create a feedback loop of price action that has little to do with the company's fundamental business. The common perception is that any significant upward movement in an AI stock like BBai is a signal of a new bull run, a clear sign that the company has landed a massive game-changing deal with the government or a large enterprise. This expectation is a powerful force, and it's what draws a lot of attention to these names. However, when we look closer, the recent surge appears to be heavily influenced by something more technical than fundamental: a significant amount of options activity, particularly on the call side. The massive volume we're seeing, which is well above the stock's average, isn't just from people buying shares, it's from traders rushing to buy short-dated call options. This creates a chain reaction. As market makers who sold those calls are forced to buy the underlying stock to hedge their positions, they push the price even higher, which in turn attracts more traders and creates more call buying. It's a classic gamma squeeze, and it's the kind of thing you see a lot in these highly speculative, high-beta names. This kind of price action forces you to reframe your thinking. It's not about whether BigBear.Ai has fundamentally changed its business in the last 24 hours. It's about how the perception of future potential, fueled by options trading and a general AI-driven market sentiment, can create a reality all its own, at least in the short term. Let's break down the layers of this movement because it's a masterclass in market dynamics. On a day-to-day basis, what's driving this stock is the conversation, the momentum, and the technical indicators far more than the quarterly reports. The high volume is one of the first things that stands out, indicating a very high level of interest and conviction. But it's crucial to understand where that volume is coming from. When a stock like BBai, with a relatively smaller market capitalization compared to giants like Nvidia stock or Apple stock, experiences this kind of surge, it's often a signal that the retail trading community is engaged. You can see this playing out across various online trading platforms, whether you're on Robinhood or using a more sophisticated setup like interactive brokers. The sentiment in the forums and on social media is often a leading indicator of this kind of action. We're seeing a flood of new retail accounts and existing users jumping on the bandwagon, chasing the momentum. This isn't a slow institutional accumulation. This is fast, reactive, and driven by the desire to capture a big move. This can be great for a quick profit, but it's a double-edged sword, because this type of momentum can reverse just as quickly, leaving a lot of traders holding the bag if the technical catalysts fade. Beyond the daily swings and speculative trading, it's important to look at the broader market context. The entire defense and government technology sector has seen increased interest, especially with ongoing global security concerns. This is a tailwind for a company like BigBear.Ai. The conversation around government contracts and the application of machine learning for national security is a strong narrative, and it gives investors a tangible reason to be interested. This is where the expectations of the market meet the company's business model. Investors see the company's involvement with various government agencies, and they mentally connect the dots to huge multi-year contracts. They project those narratives forward, often without the specific details. This is why a simple headline about a new partnership, or even the mere rumor of one, can send the stock soaring. The reality, however, is that these contracts are often complex, with long sales cycles, and the revenue from them may be spread out over a long time. They don't always translate into a sudden influx of profits on the balance sheet. So while the narrative is compelling, you have to remember that the stock price is running way ahead of the actual financial results. It's an interesting tension, this gap between what people believe is happening and what the financial reports will eventually show. So, what exactly does BigBear.Ai do? At its core, BigBear.Ai is a company that provides AI-powered analytics and data solutions, primarily to government and defense clients. Think of it as a company that helps organizations make better decisions by turning massive amounts of data into actionable insights. Their work is often focused on predictive analytics, where they use machine learning models to forecast outcomes in various scenarios. This could be anything from helping a military client with logistics and supply chain optimization to assisting a government agency with complex data analysis. The business model relies on securing and executing these large-scale, long-term contracts. They have two main segments: their government-focused segment, which includes national security and defense, and a smaller but growing commercial segment. The government segment is the most significant revenue driver and the source of a lot of the positive narrative around the company. They've been working on a number of high-profile projects. Recently, there has been a lot of discussion about their work in space and with missile defense, which naturally gets people excited. The problem is that the company has not consistently shown profitability. They've been a growth-focused business, meaning they've been spending heavily to capture market share and win these contracts, which has resulted in ongoing net losses. This is a classic profile for a high-growth tech company, but it's also a point of concern for investors who prioritize financial stability. The expectation is that eventually the revenue growth will outpace the costs and the company will become profitable. The reality so far is that they are very much in the investment phase of their life cycle. Looking back at their recent performance, we've seen some mixed signals. Their latest earnings report showed continued revenue growth, which is a positive sign and confirms the company is winning new business. But it also highlighted a continued lack of profitability. The market's reaction to these reports can be quite volatile. A revenue beat can send the stock up, while an earnings miss, even if it's on a loss, can send it down. It's a bit of a tug-of-war between growth investors and value investors. Growth investors look at the top line and the potential for future contracts, while value investors see the lack of profits and question the valuation. This is a common theme for many smaller, high-growth technology companies, and you see it with a lot of firms in the space. Even with something like Tesla stock, which is now a mature company, there were years where the narrative around future growth far outpaced the actual quarterly numbers. With BBai, we're very much in that phase. The company's financial health is also something to consider. They've managed their balance sheet and liquidity, and while they aren't flush with cash like some of the bigger players, they appear to have enough to continue their operations and pursue new business. The concern isn't about immediate solvency, but about the long-term path to sustainable profitability. As for the future outlook, there are a few key catalysts to watch. The most significant is their ability to translate their project wins into consistent and eventually profitable revenue streams. Any major new government contract announcement would undoubtedly create another wave of positive sentiment. The company's recent partnerships, such as one with the Washington Commanders for using their AI for football analysis or with airport security, are interesting because they show an effort to expand beyond their traditional government base. This is a smart move because it diversifies their revenue and makes them less dependent on the often slow-moving government procurement process. If they can build a sustainable commercial business, it would be a major positive signal to the market. Another factor is the general sentiment around the AI space. We've seen incredible interest in this space, driven by the success of companies like NVIDIA stock, which have become household names. A rising tide lifts all boats, and BBai is a company that is clearly riding that wave. The risk, of course, is that if sentiment shifts or if the broader market experiences a downturn, these highly speculative names could be hit particularly hard. A simple piece of legislation, for example, or a change in government spending priorities could directly impact their business. Another risk is the competition. The AI space is crowded and filled with both large established players like Palantir and smaller, nimbler startups. BigBear.Ai has to continuously demonstrate that its technology is superior and that its solutions are valuable. For anyone considering an online investment in a company like this, it's a reminder that doing your homework is crucial. Relying on the hype from social media or just seeing a big green number on your Fidelity mobile app or Robinhood app isn't enough. This is where concepts like self-investing require a deeper look. You need to understand the company's business model, its customers, and its financial position. Platforms that offer investment help, like Schwab Intelligent Portfolios or SoFi Robo-Advisor, might not have BBai on their lists, and for good reason. It's not a stock for the risk-averse. But for individual traders who manage their own Fidelity brokerage or Interactive Brokers trading accounts, this kind of stock is either a high-risk, high-reward opportunity or a serious trap. The key is to know which one it is for you and to size your position accordingly. Do you think the company's recent partnerships and contract wins will be enough to turn it profitable in the next 2 years? Comment below with your take. In the end, the story of BigBear.Ai is a fascinating blend of expectation and reality. The expectation is that this company, with its AI expertise and government connections, is on the fast track to becoming a profitable giant. The reality is that the stock's daily movements are often driven by short-term technical factors and speculative sentiment, not by a sudden change in fundamentals. The true value of the company will be determined not by these wild intraday swings, but by its ability to execute on its long-term contracts, diversify its customer base, and, most importantly, show a clear and sustainable path to profitability. This is a stock where the narrative is